Today we're going to talk about day trading versus end of day trading. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacy Burke from Stacy Burke Trading. Today, little deviation from our normal content, and we're going to be talking a bit about more why I choose to trade day trading as opposed to end of day trading. Now, I should quantify that a lot of the trades that I do look for during the day will come from my end of day model. So my first exposure to trading around 2000 was in the Australian futures markets. I had an excellent instructor and was just blown away by some very simple concepts and very basic system that was profitable, and that's where I got the bug for trading. But as I progressed down the rabbit hole, I felt that if you could make some money trading end of day, then maybe you can make even more money if you go intraday. And of course, that opened up a learning journey that was long, painful, and extremely challenging. But I still believe that my temperament, myself, the way that I'm wired, I guess, and driven, that ultimately I knew that to accomplish the goals in trading that I was after, and through unlocking new learning constantly and having my eyes opened up to the different opportunities that were in the intraday market, I still felt compelled that that was where my, I suppose, true best potential lie. So that began my journey of trying to figure out all the holy grail methods of day trading the currency markets. And as I mentioned, I'm going to explain today the different pros and cons that I see and as to why that I trade the way that I do. I'm trying to elaborate on some of the pros and cons of both methods for myself that I saw and what attracted me more to focusing on trading the currency markets intraday. So as I mentioned, I think there's a lot of pros with the end of day trading. One of the number one pros is, I suppose, that you place your trade in the market and you leave it. And so you're not susceptible to all the intraday swings that can shake traders out of positions. You put a position on, you put a stop in place, or you have a stop where if it's a futures contract, you can put a stop in the market with your broker or with your platform. If it's shares, then obviously you have to manage that yourself. But you can set and forget. You have a reason for entering, a reason for exiting, and you just check it at one particular time each day at the close of the market or the next morning, whatever that may be. And that's a fairly straightforward way to manage the trading method. You have the potential possibly to manage more trades, multiple trades, if you can juggle that, or if you have a system of tracking your trades. It allows you to manage more because you've got more time and you're not subject to the intraday, again, volatility and potential impulses and reactions that day trading can throw at you. It's easier to follow and monitor, obviously. Possibly less emotionally impulsive. So obviously if you're following a mechanical model or you've got some kind of computerized model that you've developed for end of day trading, it's a lot easier to manage. You have more time. Possibly capture big moves. So you may be in a trend that could potentially last maybe weeks, months, or even years in some cases. And it allows you to trade multiple systems. So that's sort of the pros that I see with trading end of day. And the cons, though, is that for me, I wanted to trade, be able to develop a model that I could trade bigger and get bigger size. And of course, trading end of day leaves you susceptible to having larger stops than intraday, because your stops on currencies would probably be at least 80 to 100 pips. And so obviously to trade big size, you'd have to either have a bigger account and to, scale into some of these trades end of day, you'd have to have a system or a model that was hopefully going to give you 2 or 3 or 4 times your risk, or have an exceptionally high profitable hit rate. So your bigger stops, possibly fewer signals. And again, I suppose for myself, I have welcomed the challenge. I knew that obviously there was going to be major challenges, but you don't really know what the challenges are until you're actually in the fire itself. But I felt that this, if I could develop a system that was successful or picked up trends or short-term moves on the end of day, why couldn't I use that model to identify the end of day trades, but then position myself on the intraday to hopefully be able to trade those moves bigger on the end of day, but using the 15-minute system or the intraday system. And obviously therefore maybe capture a 2 or 3 day move or a 2-week move or something like that, but have more size and be able to keep my stops tight so that I could participate in those moves as they were happening, but be on the intraday market. But of course, the cons of that is that there's a huge learning curve, because as we know now that in the intraday market, the Forex market especially, that nobody gets a free lunch. And even when you're in the right trade and you're in the right direction, there are so many little tricks and traps that are designed to scare you out of winning positions, but also stop you out of winning positions, even when you get that trade right, without again increasing your stop size. So lots of opportunities. We know that there's 50 pips a day on the British pound crosses. There's 50 pips a day depending on how many instruments you follow. These markets move. So there's plenty of opportunities, and as I mentioned, I like to be out of the market, be done. You have a trade, you execute, you're in or you're out of the market, and you're done. You can lock in your profit and your loss and be finished for the day. So again, my objective was to tie in these trades with the end of day trades when they triggered, but using the intraday model to trade them. And then obviously with tighter stops. I was attracted to the idea that, of course, the more that I learned, that this was a extremely highly evolved skill set if you wanted to become consistent. Not just getting some trades correct, but being able to become consistent, and then of course increasing size. I like the challenge of that. I'm driven by the idea of constant improvement, and the market is always teaching us a new lesson. So I like that idea of being challenged. Obviously, we want to make money. I should add that in there. The attraction to make more money. And of course, part of that learning curve costs you money in some cases, and hopefully not a lot. And some people obviously have had some huge learning curves and some massive lessons. The cons of the day trading course is that you're very susceptible to big mistakes, whether they're emotional, impulsive, or inexperience, unawareness, all the things that you're unaware of when you go to the day trading, thinking that it's just this thing where you can start trading a little system and it's going to be okay. But there are so many curveballs, markets change, they evolve, they're constantly dynamic. So there's a big learning curve, not only about the market, but about yourself. And that isn't suited to everybody. So again, my personality, I'm attracted to that. I'm resilient enough that even though it's been extremely challenging, I kept coming back with the mantra of getting better. Rather than getting beaten down, my mantra was to get better, because I knew that it could be done and I could see that it was happening. But again, working out all the little hidden challenges that I had, that I uncovered as I was learning about myself. You can blow your account out easily, and I can attest to that, and I think most people can. It's easy to blow out a trading account, especially if you're day trading. It's a lot harder to blow out a trading account end of day unless you just take a massive position with a huge stop or no stop. There's not a lot of room for error day trading the currency markets. It is extremely efficient at weeding out any mistakes that you can make very quickly. One of the things that I compare the day trading the currency markets to with the algorithms and the trading that happens is it's like playing playing chess against a computerized chess game, because every possible move is configured in that computer system. And the algorithms, the trading systems, they are designed to fill all the orders, everything within that space for the day. So it's really important, in order to be able to get that right. Again, there's a big learning curve. It's very challenging, and there's not a lot of room for error. You can often miss larger trends because you're capturing that intraday movement that you're after. And so because of the movements of those markets, you may miss out on larger, bigger trends when they go. Obviously, if you're trading with those trends, you can still capture large parts of those moves intraday, but you may miss out on larger trends because you're capturing those shorter term profits. For myself, I can probably only manage a couple of trades at a time, and usually I only focus on one trade setup. Whereas obviously with the end of day, you could possibly juggle maybe 6 or 7 positions or more, depending on your ability to do so, and be able to manage those effectively. Whereas if you're trading intraday and you're trading, you know, whatever, a certain size or with leverage, whatever that may be, for myself, I can really pretty much only focus on one pair. I follow 6, sometimes a couple more, depending on how they set up, but I usually narrow that down to 1 or 2, and usually will only take one trade. And of course, the big con is that day trading can cost you a lot of money, because not only can there be a huge learning curve there, but you can also make big mistakes and you can lose large sums of capital very fast. As opposed to, again, the end of day, where you're probably only taking a certain size of position because of the size of the stops. So my objective myself was to tie in certain types of setups that I used on end of day, where I could identify short-term swings or movements for 200 to 300 pips or more if it was a trend trade, and then be able to position myself in the intraday market. And after learning the setups that I was looking for, narrowing that down to 2 or 3 specifically, and then obviously working out all the bugs, where the variables that can get thrown at you, so that you can start to do that consistently and then bump it up in size. So day trading versus end of day trading. A lot of people are convinced that day trading is a loser's game. No, day trading is not a loser's game. It's a very highly skilled game, but people go to it and are completely unaware of all the challenges that they're going to encounter, all the hidden variables, not only when you get it right on live time, but then the performance variables about yourself, emotional, irrational, impulsive behavior that can end up undoing all the hard work that you've done and blowing out your account in one day. So for myself, I definitely like the day trading. I think it's not for everybody because it is extremely challenging. There's a huge learning curve, but depending on how you're wired, some people are quite comfortable to put positions in, set and forget. They may have access to larger capital, or maybe they're just doing that as a side thing to add additional income or improve their returns, as opposed to just putting them in a investment fund or something like that. So not for everybody. Hopefully that sort of breaks things down a bit. It all depends on how you're wired, what your goals are, what your personality is in terms of how driven you are. Myself, I'm not afraid to put in the hard work. I was not afraid to, I suppose, accept that there would be some big mistakes. You don't know what those mistakes are, though, until you encounter them about yourself. So I think it's definitely the way for me to continue to trade. But again, I love the end of day because that's what sets up a lot of the trades that I look for on the intraday. So hopefully you got value out of today's video, traders. It's all about finding where your skill set is expressed the best in terms of your trading style, and then making that work for you. So have a great trading session today. Enjoy your weekend. Keep getting better. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.